Hello everyone, let's have a look at the market snapshot for today. India participation has become really very weak. The advances have fallen down to almost 100 against 400 on the declines. The market has been weak, there is nothing surprising here. And obviously new highs are not getting formed, and that's the reason the market is not rising. Today we had just one high against 499 of new lows. Uh, Obviously, the markets are terrible at the moment, I would say. The breadth above 20 EMA, close to 160 stocks, above 50 EMA, 220 to 30 stocks, above 200, again 230 to 40 stocks. So the most worrying thing has been happening at the breadth end. So if you might have seen my last few videos, the breadth above 20 EMA was sustaining close to 270 to 80 stocks, and now it has fallen down to below 200, close to 170, 180. See what is happening when a stock starts falling. For it, the first point of resistance would be 20 EMA, then 50 EMA, and then 200. So basically everything, like we had almost 280, 270 odd stocks trading above 20 EMA. They all have mostly fallen now. They are trading somewhere between 20 and 50 EMA, and that's the reason the market is not sustaining. Now let's have a look at what the trend is saying. No surprises here. Nifty 50 is bearish, trading below 50 MA. The participation has become very weak. The breadth is extremely weak. Nifty 500, not a different story at all. Bearish, trading below 50 MA. The participation is weak. The breadth is even weaker. US market. US market did pretty well for yesterday's session. The advances were close to 370, 380 against the declines of 120, 130. New highs, I think after quite long, they had 25 new highs against 475 new lows, which is basically a good thing, I would say. But honestly, this is not good at all. What I'm seeing here is basically the markets are popping out, and it is almost towards its end, I would say, of the rally. The breadth, if we look at above 20 MA, close to just above 300 stocks, above 50 MA, sub 300 stocks, above 200, sub 300. So the breadth here has become volatile, I would say. I mean, earlier the scene was, I think most of these conditions were trading above 280, 300 stocks, be it 20 MA, be it 50 MA, be it 200 MA. But now, like we see, above 20 is 300 plus. It's basically volatility, nothing else. Most of the things have fallen below 20 MA, but then just volatility, nothing else. If we look at the US trend, Nasdaq looks bullish because it is trading above 50 MA. The participation has become neutral. The breadth is neutral. S&P 500 bullish, trading above 50 MA. Participation is strong. Breadth is strong. Russell 2000 trading above 50 MA. Participation strong. Breadth strong. Strongest among the three is S&P 500. So if at all you are looking for certain bets, it has to be S&P 500. That is what I would say. What is the macro picture suggesting us? US 10-year yields is rising. I have been saying this till the time US yields are rising, expect equities not to do well, and that is what is happening. No surprises there. The second confirmation comes from dollar. A rising dollar indicates nothing but just tighter liquidity, again causing all sort of problems for equities. VIX is not daunting, I would say. It is just above 20, trading at 2105. Pretty much a neutral environment, I would say. BTC bearish, below 50 MA. Again, BTC is bearish because investors don't want to put money in risky assets. That's a simple indication. Gold, it has become bearish, trading below 50 MA, defensive demand. Same story, the investors are not sure where to put the money. If we look at these four indicators, that is 10-year yield, dollar, BTC, gold, they all are just suggesting one thing: the market is not very conducive towards risky products, and that's the reason equities are the first to fall. And mostly we will see the effects in the commodities market too. But then these are very, very strong indicators why the breath is not working in the equities market, why we are seeing so much of volatility, and they all are indicating basically liquidity crunch in the market and investors not willing to put money in risky assets. The scoreboard, I would say India, I think weak would be a suboptimum word. It's a very weak regime at the moment. US looks neutral, macro looks uncertain. Takeaway would be India is bleeding, US remains stronger than India, S&P 500 is the strongest. Dollar strength and elevated yields continue to pressure risky assets. Bitcoin remains weak, suggesting risk appetite is still subdued. VIX just hovering above 20, indicating no signs of panic. What I would suggest is just be very, very cautious the way you trade. The only asset class or indices where you can put certain bets would be S&P 500. There is nothing else where we should be going at the moment. But S&P 500 also need to be very, very conservative. Your risk per trade should be your 25% of the regular RPT, 50% of the regular RPT. Like, you should be just testing the waters if it is working. If at all you go full in, the markets are so volatile, like you'll end up losing a lot of it. So trade safe, trust the environment, respect the environment, and yep. Hope you all find this video useful. Thank you so much and have a good one.